Hello, everybody. Welcome to another edition of This Week in Crypto. I'm Brian here with Dino, and we're excited to go and talk about a very big week in crypto. Obviously, as many of you know, we have hit an undisputable all-time high for Bitcoin, as well as generally a pretty big surge in the crypto markets for other coins as well. We're starting to see just a bit of an uptick in some altcoins. Now that Bitcoin has cooled off just a bit, it peaked up at about 23.8K from where I saw based on most exchanges. That might have varied just slightly based on wherever you trade. But generally speaking, we're in a spot now where things look like it could get very polarizing and very volatile. That doesn't mean things are going to drop back down. I could see things ranging for a bit. We'll talk about why we're making this claim and go over plenty of possible scenarios here. As many of you see, we're starting off by showing off our promo that we just announced today. This is our 35% off Sandbase Pro and Pro Plus promotion. Just to make sure that I have the code right, can someone verify that it's Xmas 2020 SAN for me really quick? Just let me know if anyone can see it. Max, if you're there, just give me a confirmation of that. I'll double check myself really quick here. Xmas 2020 SAN. Thank you very much, Max. All right, so Xmas 2020 SAN is the code. If you go to the payments page on app.santiment.net/pricing and enter that code, you'll instantly see the price deducted for 35% off for however many months that you decide to purchase. So happy holidays, everybody. This will be going between December 18th and the 25th. And I encourage you to take advantage because this is a pretty nice deal. And for many of our pro members, they'll be the first to tell you that these subscriptions really do pay for themselves, and it helps support what we do, helps allow us to continue churning out the type of data and analysis, and of course, having these calls for you guys. All right, that being said, we're going to jump into what I find to be maybe the most fascinating aspect of this jump, and that's the fact that 3 years ago to the day yesterday when we had that all-time peak, that is when we had our last all-time high for Bitcoin. For many of you who were in the space 3 years ago, December 2017, things were extremely euphoric. Everyone was telling their family members they need to get into Bitcoin. Prices are going to the moon. We'll see 100,000 at some point, which, by the way, still may be the case. But back in 2017, it seemed like something that could be realistic within that next year. Obviously, that didn't happen. We had a giant correction. And notice how I'm looking at 3 months of data here. This 2017 is sort of in the end of that first third of it. And I'm highlighting how daily active addresses were exploding, social volume exploded, and social volume in blue here, and then trading volume in white here, all exploded right before the peak. So they were all about, 4 to 10 days before this price peak happened. Since that peak, none of these three metrics here got as high as they were right before, right? And that's something that we really like to look at. When you look at these three metrics in tandem, we have an article written by one of our staff members that really goes over why these three metrics work so well together. When you see social volume, AKA the amount of mentions of an asset, and trading volume, the amount of actual trading going on, buys, sells, order book activity, and then of course daily active addresses, which is the amount of unique addresses interacting on the actual network at any given time. When all three of these are going up in unison, it's a great spark plug for prices to explode, and that's what happened. However, right before this peak, you're seeing a big drop off here, right? This volume didn't sustain itself. It happened very suddenly and then dropped right back off, recovered a little bit after the peak, but it was lower lows, lower highs every time. Same with social volume, very high spike here followed by lows. And generally speaking, when you're seeing three metrics spike like this and then all fall within a few days of each other, that's the sign of a top. And sure enough, that's what happened here. And the reason I'm bringing up 2017 here, going into the history books, is because we want to look at where we are now for comparison to see if something like that may be happening again. This is the past 3 months as of right now. And we see here trading volume peaked at right around 1 p.m. Pacific time where I am, and it's dropped off a little, but it's not a huge drop off as of yet. Social volume, we had our biggest peak way back in November, so that's a good sign because we're still seeing plenty of other spikes that are almost as high here. Obviously, the big social volume spike happened as we climbed above 20,000 for the first time on December 16th. And as far as daily active addresses, there's a little bit to be desired here. We're not getting, these big spikes up at about 1.2 million anymore. The last big time we had that was on around December 2nd, and that was about 1.17 million. So long story short, I think that these three metrics are looking slightly concerning. I'm not going to call it a 10 out of 10 on the concern scale, maybe more of like a 6.5 out of 10, with 5 out of 10 being neutral. So it's going to be an interesting next week, and I'm going to be watching these three metrics very closely, particularly this big trading volume spike that just happened here. As prices go up, if trading volume is rising with it, that's a sign that the rally can continue, as many of you TA traders know. But if it goes up and drops off while the price stays high, that is a bearish divergence and something to keep an eye on. All right, I'm going to move on from that for now. I'm going to skip the screener, and we're going to look at a few social metrics really quick. So as far as BTC and Bitcoin mentions, this is an interesting one. What you probably would suspect is the amount of mentions exploded for Bitcoin and all of crypto to an extent as Bitcoin crossed 20K here. This chart is a bit small and it can't be full screened on this page that I'm looking at now, but trust me when I say these blue lines here were all up pretty consistently compared to the very brief spikes that were happening over the past few months. The orange line here is social dominance. And you may think that all the discussion kind of veered toward Bitcoin, but that was not the case. In fact, even as it crossed 20K and hit its all-time high, the orange line here stayed pretty low, and we had plenty of higher times over the past 3 months where the dominance of Bitcoin compared to the rest of crypto was much higher. So that actually is an encouraging thing for Bitcoin. And it means that the crowd is not in complete FOMO mode yet, like you would suspect. Maybe they never will be. But interestingly, we're not at that kind of point where the discussions are just Bitcoin, 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 whether it's buy or sell. It's not quite the polarizing subject that you might suspect it should be. Now, going down here, what you can actually do just by scrolling down is seeing how the spikes on different platforms happened and the timing that the awareness of Bitcoin's all-time high was actually becoming a topic of discussion. So here on Reddit, for example, you can see very early on, right on December 16th or so, as it was crossing 4 a.m. Pacific time, that was when it had its big social volume spike. Telegram, on the other hand, it didn't really have its big spike until just about a day later on the 17th, when it was already close to 23K. Going over here, professional traders chats, it's more stayed flat. I don't put as much analysis on this one as the other four platforms, so I'm just going to run by it. Discord actually was at the same time as Reddit, but it wasn't nearly as big of a spike and not quite the same amount of enthusiasm. And then look at Twitter, just absolute explosion here in discussion right at that same time as Discord and Reddit. And what I'm doing by showing this is pointing out that the different times in which the crowd awareness starts to play a role can have an effect, especially on Twitter, which is the biggest and most powerful in terms of crowd effect on the markets. And when you see this big spike here, it looked like it was a mostly positive one and an indication that FOMO is occurring. Now, if you combine all of these together, if you're getting spikes right around the same time, that's generally the sign that a local top is going to happen. But in this case, they happen at very different times, which is why the rally kind of just climbed up, obviously quite rapidly, but not an instantaneous like you've seen the occasional rally occur in the past. So interesting to see here. Obviously, this is going to be the total of the five. So you can always just look at this and see that there was a spike, but it wasn't a significant one compared to the ones in previous months here. So definitely take advantage of the sand trends option here. You can go to this link here, right on the top left button, and then enter any keywords you want. In this case, I'm just combining Bitcoin and Bitcoin together with an or in the middle, and that's going to tally both of them simultaneously.
By the way, Brian, while you're still on the social trends tool, you might want to type in ATH, all-time high, so
Oh yeah,
that we can see a few very interesting patterns in the last pretty much month and a half. So really, if you notice, you can turn off social dominance just so it's less noisy. But if you take a look at the chart, basically since the early November, even the little spike on November, what is it, that like 4th or 5th, coincided with a local consolidation, yeah, early November, and then pretty much after that, every sort of move upward that had a coinciding spike in all-time high mentions also ended up with a either a consolidation period or a local price correction. So obviously, we knew that there was going to be pretty big spike in all-time high mentions yesterday and the day before, simply because we finally broke it. But in the past, it has kind of shown us that the bullish sentiment has started to grow rapidly, and usually that doesn't tend to fare all that well for BTC. So I'm not surprised that we saw that we've already saw uh, a drop below 23K today. There has been a few sort of topish markers in both social and on-chain data. We can talk about it a bit more in the next half an hour or so. But yeah, this is something that I like to look at. I think it's a similar thing when you look at like 20K or 30K mentions as well. You'll see very similar sort of patterns. So yeah, it seems like obviously the crowd is bullish. There's a lot of all-time high talk, and usually when you see these types of events, yeah, look at that. And like if you look at previous 20K markers or 20K mention spikes, you'll see obviously them kind of coinciding with the local tops there. So a fair amount of bullishness as we would expect to see at these levels.
yeah, not surprising that the biggest 20K candle happened as 20K actually occurred, as opposed to all the speculation leading up to it. But very interesting there, especially seeing that the biggest all-time high spike happened back when the price was still at 19.3. And then when it actually happened, much less mentioned, probably because of this, which was the actual weighted social sentiment of the crowd. And when it actually took off here, right there, that is when we dipped into negative sentiment territory very briefly. And what this is telling us is that a lot of the crowd either exited the markets or at the very least they were skeptical that the price would rise higher, because we had that sort of Bart Simpson uh, uh, graph shape here, and it implied to a lot of people that the price wasn't quite going to be able to break that all-time high that was set back in 2017 that we opened the call with. So the skepticism rose. We went negative compared to the norm of Bitcoin mentions over time, and as soon as that happened, it basically acted just like shorting would, in terms of just essentially being rocket fuel for the price to go higher, because prices tend to go higher when the crowd least suspects it to go higher, vice versa when the crowd expects it to go um, to actually jump up, that's when the price tends to drop down and correct. So we had a perfect example of that here, and as soon as it did, the mood suddenly changed right back to super positive, and now we're still in that mode, which is actually a mildly bearish sign, if not a pretty scarily bearish sign, that we could be dropping back down a bit. As you can see historically, when we have these really high marks here, it's the sign of tops happening. This one was a bit of an exception and basically just happened early. But when the big one happened here and these two small ones happened, that's when we finally had that big correction that lasted about a year and a half. Or sorry, not a year and a half, 6 months ish before eventually coming to its conclusion on Black Thursday and then rocketing up. So interesting chart here. If you are a pro member, make sure to check it out at graphs.santiment.net/social. All right, I want to also take a look at how Ethereum is looking, and I'm looking right now at Bitcoin versus Ethereum's percent of total supply here. And what I think was a big propeller for the price to break its all-time high a few days ago was the fact that between December 3rd and December 9th, there was a big move off of tokens from on exchange to off exchange. And when that happens, it's a very bullish sign. It basically means that holders and traders and investors are collectively confident in their assets and moving them off exchanges with no intention to make a big sell and impact the market negatively. So the lack of possible negative impact on the markets made it possible for the price to rise, with obviously some help from whales and some other things that Dino will get into after my segment's done here. But notice that after December 10th, as the price was rising, a lot of people were starting to move their tokens back on until we're now back above, as of today, we're back above the amount of tokens that were on it before the big drop off on December 9th. So I think this is a key right here. We're now seeing more percent of supply on exchanges than we did before the big uh, collective move off of exchanges, and that's telling me that maybe this rally is at least going to come to a rest here. But as I mentioned, Ethereum, on the other hand, has stayed very low, and it's close to something like a 2-year low still in terms of its percent of supply on exchanges. And that's a great sign. And we put out a tweet last night for you Americans last night telling you that this could be the sign of a little bit of profit uh, potential moving into Ethereum and altcoins right now. Normally, when I see these kinds of movements upward for Bitcoin going back onto exchanges, but Ethereum, and if I were to show a bunch of altcoins, a lot of them like Chainlink would look low like this as well. This is a sign that a lot of altcoins may benefit from all the profits that have been taken in Bitcoin. So something to keep an eye on. I won't spend too much time on this, but if you want further explanation, definitely ping us in Discord, and we're happy to talk about this more in detail. We also have a few sand sheets models related to it, so you can compare many assets together.
Brian, if you wanna just go back to that chart for a second, you can turn off Ethereum's exchange or supply on exchanges and just look at the last 6 months for Bitcoin supply on exchanges. We published an insight, I think it was 2 days ago, which Gary, if you want to share it in chat, where we kind of mentioned that in the last 6 months, there have really been like four significant dips in the amount of Bitcoin being held on exchanges. So the first one was around September 19th, and then the second one, yeah, that's the first one. And then the second one was like October 15th, and then November 15th, and then the last one was before this latest breakout. And pretty much all four of them coincided with a sort of a period of price recovery for Bitcoin, especially the last three. Once we really started rallying, we saw a decline in the amount of total supply of Bitcoin on exchanges, coinciding with periods of very swift price bounce back for the coin, which does make sense. When there's sort of exhausted sell side pressure and there's plenty of bulls around looking to absorb any sell side pressure that does exist, it usually tends to be beneficial for the price of the coin in question. So yeah, something to keep in mind. You can kind of see that the last time we really what is that, like early December, yeah, or maybe late November, once we really started seeing the amount of Bitcoin move back into exchanges is when we had that market-wide correction the last time around. So we're now kind of moving slowly back into that territory, which is completely to be expected. It's to be expected that people are going to start taking profits and selling off their bags, which is one of the reasons I wouldn't be surprised for us to at least kind of establish an interim top around 23K for the moment, and then see some price volatility from here on out in the next couple of days and weeks.
Yeah, there's definitely a very obvious correlation here, and it's quickly becoming one of my favorite metrics to keep a close eye on. And you'll see plenty more updates on our Twitter and other social media. Okay, I also, maybe while you're still on mic here, Dino, maybe you want to give a quick explanation of, actually I'm going to keep it on shared access here because full screen disables shared access for some reason. I'm going to remove Ripple and only show Bitcoin and Ethereum. But Dino, if you want to give a quick explanation of this new metric, since I think you're the best explainer of it, this is the BitMEX perpetual contract funding rate. And I think it has a lot of value right now.
Yeah, so this is another indicator, or it was at least an indicator for me yesterday that we might be approaching a period of cooling off for Bitcoin. So the funding rate is a fee that is paid by one side of the perpetual contract to the other. It's basically a derivative metric, which means that when the funding rate is positive, especially this is sort of extremely positive, like you've seen it yesterday, that means that on average, longs are paying shorts, which means that the market is overwhelmingly bullish. And then when the funding rate is negative, and the more negative it gets, it means that shorts on average are paying longs. So the market is, on average, is fairly bearish. So here currently we have integrated BitMEX's funding rate in particular on our website, although other sort of providers of derivatives data are in plan for the future maybe. But this sort of move up, especially if you look at the last sort of 6 months, pretty much every time we've seen these major spikes in BitMEX's funding rate, and this one for Bitcoin is the highest since the Black Thursday crash. Every time that we've seen this massive spike in funding rate, or in other words, every time that we've seen this sort of overwhelmingly bullish sentiment, we have seen a short-term sort of consolidation or correction. So you can see that happening during both of the Bitcoin's previous local tops. So on December, what was that, 2nd and November 28th, respectively. You can see a pretty similar spike in BitMEX's funding rate in July once we broke 10K, and then in August once we broke, I think it was 12K for the first time in a while. Both of those had a sort of a massive spike. Yeah, especially if you cancel out the Ethereum's funding rate, which is a bit more sort of up and down. Yeah, there you go. So here you can clearly see some very pronounced spikes in BitMEX in Bitcoin's funding rate, and how it kind of coincides with its price action. So early July, finally, once we broke 10K, there was a massive sort of cluster of funding rate spikes, pointing to the fact that the market and derivative investors were very bullish on Bitcoin, which usually tends to kind of lead to a short-term correction, sometimes even an overcorrection. And then on August, I think it was 15th, once we hit a summer high for BTC, that was the highest funding rate that we've seen in about 6 months for BTC. And then on September 1st, before a market-wide correction, that was the first time in about 15 days or 2 weeks that we saw a move into bullish territory in terms of the derivative traders are concerned. So very often we see these massive rises in funding rate coincide with short-term price corrections. Once again, completely sort of expected that we would at least see a bit of a cooling off period. If you notice previous spikes, they don't necessarily lead to like long-term corrections or anything like that, but at least it does lend itself to a period of normalization before we can move on from it. So that's pretty much how I would read it and how I would look for it.
Yeah, thanks for explaining that. I'm still learning about it a bit myself, but I think that it's pretty clear that the the positive spikes here are generally pretty nice top indicators, but even more so on the negative end from early September all the way until early November, all of these negative spikes showing all the shorts that were going on were, like I say once again, used as rocket fuel to help the price skyrocket. I think that this spike here was really telling that that the bottom was going to be in, and that the climb would progress as long as we stayed negative here. So I'm really loving this metric here.
Yeah, and also like if you look at Bitcoin's exchange inflow yesterday, you'll kind of see the pretty much at the same time as we saw this massive move into positive funding rate, not just on BitMEX but on a bunch of different exchanges. You'll see a massive spike in Bitcoin's exchange inflow. So I mean, these types, market participants and analysts, they look at these types of metrics. They're not, a secret. So when you see this type of strong move into bullish sentiment, it's an incentive to try and perform a long squeeze, right? And try and crash the price uh, significantly down. And that's why we saw, I think, a large amount of BTC being moved to exchanges yesterday before the sort of top was, or about at the time where the top was established. I think it was the highest spike in exchange inflow in the last, it was definitely last 6 months and maybe a year. Yeah, since the Black Thursday crash, basically. So definitely, there was a bunch of profit taking place as we broke 23K about 12 hours ago, which is usually being a sign of especially during a rally, it's usually a sign of a short-term top. Why? Because it's difficult for even Bitcoin bulls to try and absorb this amount of sell side pressure when the price is, even when in price discovery, you would still need to be okay with buying at a significant premium in order to try and absorb this type of sell side pressure. So, a rising sell side pressure plus an extremely bullish sentiment does tend to kind of lend itself to short term price corrections, which we are kind of seeing at the moment. Obviously, this is just a very small blip, but it's a blip that was expected, right?
Yeah, great stuff, Dino. Thanks.
And one thing I will add from general behavior analysis. Market are here not to reward us. Market is here majority of participants to rekt. Yeah, no, never forget it. Rewarded are also only patient and emotionless, or sometimes lucky. Most of the players are wrecked and punished. Once you see this kind of spikes, not this, but that someone was willing to pay for longs so much after market grows much, rest assured it will stop there. They will be wrecked. Yeah, they will no means market will never reward it. After so much growth, and someone say, "Yeah, I'm confident, and I'm confident. I'll go long." That's it. It doesn't mean it like we will crash forever, but you don't go into long position when you see this. And that was about the fountain rate. And this with spikes, those who moved to exchange, it was only one intention: they wanted to sell. No, all of them sold, and market will typically don't give you much chance to sell at good price. So it will probably now correct unless they will be forced to say, I don't want to lose my profits, they will sell. So we should see some wicks to the downside. If we see it, okay, that's it, correction is over. It means everyone who deposited to exchange gone, they indeed sold it. And or it will take a little bit time. Yeah, it will take a little bit time, makes you feel so comfortable, and you will sell it. All this money which went to exchange, they have to be sold. Market makers see this data. They see that there are deposits from retail, from crowd, for small fish. They are not going to pay you high price. Yeah, they will pay you as low as possible. Yeah, only once these deposits are absorbed, processed, we can keep growing. So to combine fountain rate has to be rekt. All these retailers who want to profits, that's fine, but markets will not pay you high price. It will be for some time correction. It's a rare combination. And by the way, you can, I think, set even signals on the Santiment platform to get this confirmations. But yeah, we can continue once it's processed. Now it's being processed. So some points of understanding the background or context of what's going on.
Thanks, Maxim. And he mentioned that you can set signals for it. I believe you can just go here to alerts, go to on-chain, and right there, click on exchange inflow, set your variables, you can see the amount of times that it will fire off based on the percent change that you're looking to set signals for, and you'll get these alerts sent straight to your Telegram, email, or even as a push notification. So really cool stuff there that's extremely useful if you're on the go and don't want to be constantly tracking this chart 5 times a day or more. All right, exit without saving, get out of that. And now I'm going to show a few more Sandsheets models and more of a technical look at where the metrics are sitting as of now. So this is it's going to do a quick refresh here, but as it does, I'm going to explain what this does. It's essentially measuring the amount of average trader profit or loss compared to historical averages and giving a measure of how close that is to the top 10% highest that profits usually go for many assets or the bottom 10% as far as losses go. So right now, what we're seeing with Bitcoin is it's close to the red dash line. It's not quite crossing it. Yesterday, when I was looking at it, it was actually at about negative 1.7, which is extremely bearish on this model. Anytime any of these assets cross this line, it's generally a sign that there is too much profit amongst average trader returns to sustain itself. And historically speaking, anytime it's crossed here or here, it's either going to correct or it's going to be the sign of a bottom. So right now, Bitcoin is back under this absolute danger zone, but it's still looking bearish based on the fact that average trader returns are very high. If we look at the MVRV here, we can actually break it down. Just focus on these 6 candles here for a minute, and you can see that the 7-day average return is about plus 6.7%, 30 days plus 14.6%, 90 is plus 33.9%, and it goes up and up. The 1 year is at plus 67%, guys. So this is really big, and you can see that other than synthetics here, Bitcoin is the highest 1-year return out of any of these 20-ish or so selected assets on this model. And that's a sign that the number one asset might be getting a little bit overheated at this point, and that's why these 6 metrics are being used to create this divergence, showing that we're close to the danger zone and actually were way in that danger zone yesterday and even the day before. They were both in the -1 to -2 range, which tells us that if the correction doesn't happen immediately, it's at least very imminent. So right now, for example, the only one that's in the red would be synthetics, which I believe is on a bit of a plus 20 to 30% run. I don't know the exact number over the past 24 hours. So that would tell you that this token in particular is probably going to correct at some point, or at least have the average trader returns come down through some volatility and FOMO and FUD in order to get back to a more neutral number. So interesting stuff there. I won't go too much more into it for now. As far as daily active address divergence, it's as you would expect with Bitcoin. Since daily active addresses haven't been rising as the price has, it's more so stayed pretty flat. That's why you're continuing to see these huge neon red signals telling us that the address activity is not kept up with price as the price has climbed. Now, I am going to be doing some work on this. I think that there's going to be some trend lines that need to be implemented, because over time, it takes slightly less and less daily active addresses in order to sustain further and further price growth. But this is still going to be bearish no matter how many trend lines are added to it. It's just inevitable that address activity is going to have to catch up with price eventually, or price is going to have to catch up with the lower address activity right now. I will note that on Ethereum, it's looking a lot better, actually. Generally, when we're getting into these dark red, almost neutral candles, it's a sign that there can be some price pump action. You can see during the rise here, it stayed pretty dark red, and then as it got to medium and bright red, that's when it sort of started to flatten off and start to get all this volatility going back and forth between the 450 to 650 area right here. So keep this one in mind. If you don't have access to these models here, Um, get a Sandbase Pro subscription, or just try it for 2 weeks, and you'll be able to make a copy of it just by going to File, make a copy, and then you can go to Add-ons, Sand Sheets, enter your API key, and you'll be able to get access and auto-updating data on these models, just like I am. I'm going to stop my segment here, and I'm going to hand it over to Dino, but I'll probably jump back on as we answer a few questions toward the end. Dino, you with us?
Oh,
Uh-oh,
you hear me
there
now?
you are. Yep.
Oh, there we go. I guess I was muted, double muted. Sorry, guys. So yeah, like I mentioned in chat a minute ago, I'm just gonna show a few more charts, especially when it pertains to alts, and then we want to take some questions, audience Q&A. So any sort of coins, assets, metrics that you would like us to look a bit deeper into, let us know in chat, and we'll get to them in about 5 to 10 minutes. So are you maybe high on a coin that is currently not performing well compared to the rest of the market, and what that might mean for it? Let us know. Or do you think that a particular coin might be headed for a correction? We can take a look, do some impromptu analysis. So just type it in the chat. We do this every week, and it's fun. It's also fun to hear what people are kind of eyeing at the moment. So even if you don't necessarily want us to do some analysis on it, just let us know in chat what you're currently looking into, right? Um, so as Brian mentioned, I also just wanted to do a bit more explanation as far as the Bitcoin's MVRV is concerned, because we wrote this article yesterday, and since then Bitcoin has kind of, as you can see, it's kind of just done not a whole lot. It's down 0.5% since the publication of the article, and we mentioned this 30-day MVRV here, which we say Bitcoin has now entered in the danger zone of the 30-day MVRV, which usually signals a local top is coming, as short-term holders are well in profit at the moment. So this is what we were referring to. So the way, like Brian mentioned, that MVRV works is that it shows the average profit or average loss of a particular group of holders. 30-day MVRV shows the average profit in this case, because it's above zero, of all Bitcoin addresses that have acquired Bitcoin in the last 30 days, right? So the higher the MVRV goes, that means that the higher their profits are, or unclaimed profits. This is an important thing to note. So the higher the unclaimed profits, the more likely it is that we are going to see some amount of sell side pressure, more incentive there is to sell and to begin to exit your positions, right? So the way that MVRV usually works and the way that on-chain analysts use it is they look to the past and they look to previous highs and previous lows in MVRV, because according to some on-chain analysts, the higher that we are in terms of MVRV, the more dangerous it is, and then the lower we get, the more sort of opportune time it can be to accumulate. Obviously, this is not investment advice. I'm just saying how some analysts use this metric. So what you can see here, and this is for the last year or so, we can see sort of a clear establishment of a potential danger zone for Bitcoin's 30-day MVRV. So this is sort of the point at which short-term holders seem to like to take some profits, start selling off the parts of their bags, which tends to obviously have an impact on the price, right? So at this point, I would say this is somewhere around. So we were at 19%. So anything I would say between 16 and above, between 16% and above. So 16% means that on average, all short-term Bitcoin holders are plus 16% on their investment, on their initial investment. So anything about that above that point seems to be or seems to have established itself as a potential danger zone or a correction zone, right? So once again, like I mentioned a minute ago, this doesn't necessarily need to mean that we are going to go overboard in terms of a downtrend. It usually just means that we need to cool off a little bit, see some sell-offs, some profit taking, so that the average profit margins are less sort of juicy for people to start taking to continue taking profits, and then we can go back higher. So the similar thing can be said for Bitcoin's 365-day MVRV ratio. So we've actually seen it in the past year. In particular, we've seen it kind of peak at the pretty much the same levels here. So this is about 63%, and then we had 62%, and then again 62%. So this was sort of the previously established danger zone in the last year, and I can show even further behind, or last 2 or 3 years, so you can check out the data going back to the 2018 all-time high. But currently we are at about plus 70%. So the average profit of long-term Bitcoin holders is currently about 70%. So all that means is that you should just kind of put yourself in their shoes and think about what you would do in their place, right? Would you be content with taking or claiming some of your profits if you were plus 70% on your initial investment, or would you be looking to sit on your backs for a bit longer, and then start claiming at about maybe 25k, 30k, and so on. So for example, if we look at 2019, you can see that during the 2019 cycle, we even went higher than we currently are. We actually peaked at about, what is this, 102%, something around that. Yeah. Now, do keep in mind that this metric historically tends to flatten out over time. So, for example, if I look at 2018, you will see even higher highs. So actually, let's 17. Yeah. So this metric, this is sort of the way that it looks for most coins, Bitcoin and altcoins together. It tends to flatten out over time, and we are kind of sort of unlikely to see these types of MVRV levels again, or very often, simply because market does mature over time, and people are not necessarily expecting the same returns as they did in the ICO heyday, right? Still, that being said, even if we take the last 2 years of data, we can see that during these bull cycle highs, we have seen both short and long-term traders. Let me show you the short-term traders. We have seen them grow a bit further up than we are at the moment. So even though we are currently in a sort of established danger zone as far as MVRV is concerned, I would say that if this is, if there's enough confidence in Bitcoin's short-term price potential, we have seen people kind of stick to their guns a little bit further, a little bit higher, before they start really selling it um, en masse. All right. So, like I said, I wanted to also, and Gary, if you haven't already, it would be great if you can share this insight so people can kind of see what we talked about yesterday as Bitcoin was topping. So I also wanted to give just a brief overview of what we're seeing in terms of the altcoin department. And no surprise here, we are seeing rising sell side pressure, not just for Ethereum, but for a number of top cap altcoins. So first, we'll look at the exchange inflow for Ethereum in particular. Obviously, we are, this is something to be completely expected. We have seen a massive amount of Ethereum being moved to exchanges or non-exchange wallets in the past 24 hours, especially as Ethereum was kind of peaking at 660. I think it was 65 at one point. And then we are seeing a similar pattern with Chainlink, one of the most popular ERC20 coins. We are seeing a very similar pattern with a number of favorite DeFi coins, or crowd favorite DeFi coins. So this is Uni in particular. This is Sushi, which has seen, in general, even without the market helping it, it has seen a massive rise in price over the last month, and also iFi. So overall, we are seeing a fair bit of sell side pressure, not just being exerted on Bitcoin, but on the entirety of the crypto market. What does that mean? I think in general, or in short term, it could mean that a short term top is being established. But in general, it's also a relatively positive sign, because there is a fair bit of FUD and uncertainty in the market. This isn't, I would be personally, obviously, once again, not financial advice, but personally, I would probably be more concerned if I saw nobody selling at these levels. I would be very concerned that we are a bit overvalued in terms of the crowd sentiment towards the market in general, and investor sentiment. So the fact that we are seeing a bunch of people kind of flooding out of the market at the moment, good. Obviously there's going to be a bit of pain, and there's going to be some short-term consolidation, but it leaves us with room to grow in the future, like you've seen here, right? And here we've seen both of Ethereum's previous tops coincide with sort of spikes in exchange inflow. That's to be expected. And what's also to be expected afterwards is that you see a bit of a price correction, right? Again, that doesn't necessarily need to be a nail in the coffin for any rally. Just in the short term, I think it's something to keep an eye on. All right. So since we're already 45 minutes in, let's take a look at a couple of coins. And then for anything else, guys, be sure to check out our Sandbase Pro group in Discord. This is where we kind of, talk about coins and metrics pretty much every day on a daily basis with our community. All right. So
You
Brian,
know,
go
yeah, a
ahead.
good one that we've gotten a request on for both Twitter and YouTube that I think we should have some nice ERC20 data on is compound.
Indeed. All right. Actually, let me look at it. One thing that I forgot to mention before I move into compound is I had the screener prepared. So one way that I also try to kind of visualize the amount of sell side pressure being exerted, especially on the altcoin market, is so this feature is called a screener. You can go to it here from a navigational menu. It's super interesting, and it can give you a lot. You can play with it pretty much 24 hours and not get bored with it. There's a number of filters which allow you to kind of make your own watch list based on a list of different conditions, right? So one of the conditions, or two of the conditions that I've added here, is number one, I wanted to only look at coins with a market cap above $1 million, and then I wanted to look at all of the coins that have had more than 100% increase in their exchange inflow, or in the amount of coins being moved to exchanges in the last 24 hours compared to 7 days earlier, right? So basically, I wanted to look at coins that have somewhat of a high market cap and that have a bunch of coins being moved to exchanges, presumably to sell. And currently, it's more than 100 assets kind of suffering this sort of fate. So once again, I would say this is a fairly expected reaction to breaking all-time high, especially because a lot of alts haven't really been able to keep up with Bitcoin's price action. If you look at Bitcoin's dominance, market cap dominance, it continues to grow. Last time I checked earlier today, it was about 66.5%. 2 days when I looked at it, it was like 63%. So Bitcoin's dominance continues to rise. So it's no surprise to me personally that I would see a lot of people being kind of squeamish about holding on to these altcoin bags, especially since they're not entirely ready, it seems, to pump in conjunction with Bitcoin. Like the biggest sort of gainers in the past 7 days were Litecoin, Ethereum, Ripple. So really top of the top caps. That seems to be where the most of the gains were concentrated, or are concentrated at the moment. When it comes to lower caps, it seems a lot of people are still kind of squeamish about holding on to them. Again, not necessarily great for a short-term price action, but necessary for a sustained price rally, right? So, okay. Now let's look at Compound, and let's see what we got in terms of its on-chain and social activity. Actually, I'm going to take another window here to look at it. All right, so Compound has been finally kind of charting in the right direction, pretty much ever since Coinbase introduced that kind of learn and earn campaign for Compound. I think that was around this part. There was a spike in daily active addresses that kind of marks it. So let's see. Yeah, it was here. So this was the time where Compound started promote. So you can kind of see a period of dormancy, or of a declining amount of on-chain activity for Compound here, and then once we really saw people moving back into Comp, starting to interact more with Compound, lo and behold, we saw a strong increase in price. But this point in particular, I think it was like November 10th or November 11th. I even wrote about it at the time. There was a campaign by Coinbase called Learn and Earn, or Earn and Learn, whatever you want to call it. Basically, you kind of watch 3 or 5 videos about Compound. You need to, I think, have a do a transaction with Comp, have Comp in your wallet, something like that. Essentially, it's supposed to engage you with understanding how comp works and engage you with the protocol in general. So that's why you see this massive spike in daily active addresses. It isn't exactly organic, but rather it's kind of been it's a result of a marketing campaign. But since then, however, it seems like more and more people and more addresses have been interacting with comp. This is great. If you're looking at a coin from a long-term perspective, if I were to see like a 2-month rise and a steady sustained rise in the amount of daily active addresses, that would be something to consider. In general, that seems to be a precursor for a lot of sustained price rallies to see this sort of rise. Now, I'm not sure exactly why this particular spike happened. I don't know. Whoever asked about comp, if you have an idea, if there was any sort of event or any sort of a particular news or announcement that prompted this spike in the daily active addresses, because it doesn't seem to be connected to its price action. But yeah, as long as you're seeing a rise in daily active addresses, that's good. Like, for example, okay, let's look at current daily active addresses for comp. So this is the amount of unique addresses that are interacting, meaning selling or buying comp, transacting, moving or receiving comp in the last 24 hours. There's about 4,800 addresses that are interacting with the comp token in the last 24 hours alone. So let's go back to our screener here and let's reset our filters. And instead of looking at exchange inflow, let's just have it load all of the assets first. Instead of looking at the exchange inflow, now I'm going to look at all of the Ethereum-based coins, and I'm going to rank them by the amount of daily active addresses, right? So here we go. I take market segments, Ethereum. So I want to look at all ERC20 coins. And then I want to look at all ERC. So there's about 1,200 of them in our database. And I want to look at activity. Basically, I want to look at all coins that have more than, let's say 1,000 daily active addresses in the last day. There's only 17 of them, right? And Compound is at number 9. You have Ethereum, Tether, obviously always going to be on top. Chainlink, USDC, DAI, basically top cap stablecoins. You've got a few very prominent DeFi protocols like Aave, Uni, and iFi, and there's Comp. So Comp is in very good company, no pun intended, as far as its on-chain activity is concerned. So if I see this, or if you see this trend continue to continue to sustain itself going into new year, it can be a good sign for comp's price action as well. Now let's look at, as far as its sell side pressure is concerned, how comp is looking like. Okay, nothing too surprising here, especially when it comes to, okay, let's first look at the daily active deposits, right? So very often you will see these rises in daily active deposits. Deposits are addresses that are used to funnel comp to exchanges. So the only reason why these addresses exist are to apply, sell side pressure to a coin, essentially, are to move comp to exchanges, presumably to sell. And that's why you'll see these sort of spikes in comps, daily active deposits around some of its local tops, like here and obviously here, and to a lesser extent here. And then if we look at it, if we look at its exchange inflow, we will, and let me zoom in a bit. Yeah, we'll also see sort of an increased amount of sell side pressure, or the amount of comp being moved to exchanges in the last couple of days. Again, something to be expected, and that's why I'm not too surprised to see a sort of, obviously a lot of coins are now just going to be at a fate, sort of, they're just going to have to do whatever Bitcoin tells them to do. But I'm not surprised to see this sort of cluster of exchange inflow spikes in the past couple of days as comp starts to rise, because like I said, I don't think a lot of people are super confident about their altcoin bags, especially if Bitcoin keeps breaking out, right? So in the short term, these types of moves, or this type of increase in the amount of comp being moved to exchanges can have an adverse impact on the price action. Ideally, what you would like to see is sort of this period of dormancy as far as sell side pressure is concerned, pointing to the fact that not a lot of people are selling, so that we can kind of see more room for its price to grow. Let's look at its social activity as well. Yeah, once again, spikes in social volume tend to coincide with local tops. Let's see if this holds true. Yeah, it holds true for comp's previous tops as well. So, okay. So spikes in social volume here, 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 and then although on a lower scale, obviously, but the same sort of rules seem to apply, is that when you see these rises in the amount of mentions of a particular coin, it usually points to an increased interest in the coin in question, and it points to a FOMO related, chatter starting to grow in the community. It points to a lot of people start talking about Moon, talking about Lambos, and in general points to overvalued conditions. So it's very frequent that we see these types of spikes in social volume coinciding with a short-term price correction, especially when they happen during a rally. So we saw it here as well as here. Ideally, like I said, similar to exchange inflow, I would rather see these sort of levels of low social volume, pointing to the fact that nobody was really talking about comp all that much. Nobody seems to care. Great. If a coin can have strong fundamentals but continue to kind of fly under the radar, that's a coin that I would like to look into, right? So ideally, we would see the amount of interest in coin maybe counterintuitively, but I would like to see the amount of interest in comp start to decline in the next couple of days. It probably will because it's going to be the weekend, but I would like to see it drop into sort of normal territory, standard territory like here in the next week or so that we can kind of see a sustained price rally once again, or a potential for a sustained price rally. Okay, I don't want to take too much time looking at a particular coin. We are also
Hey,
seeing.
Dina,
Go ahead.
I've actually got a request just before the call ends. Don't mean to interrupt, but the
Okay.
holder distribution of Bitcoin and or
Oh,
Ethereum might be
indeed.
a good thing we
Right.
didn't hit on yet.
Right. Okay. Let me then just look at one more thing for comp, and that is obviously the MVRV. I just want to see where we are in terms of so comp. Obviously, the problem with applying MVRV with these short or sort of young coins is that there's just not a lot of data. So I mean, yeah, let's look at the 30-day MVRV for comp. It seems like this is, for now at least, an established danger zone for comp's short-term holders. So anybody that's acquired comp in the last 30 days, these seem to be sort of profit margins at which they start claiming some of their profits, and it tends to coincide with a short-term correction. So this is about anything above plus 20% seems to be, for now. Keep in mind that this is very, like, the data is just a couple of months, so I wouldn't really rely on it too hard. I think we can still kind of, it can grow further up than this, but for now at least it seems like the established danger zone as far as short-term comp traders are concerned is about plus 20% and upward. So when you see these levels of MVRV, it usually tends to point to a short-term, a period of short-term profit taking happening for comp. So let's look at the last month again. All right. So the good news, whoever asked for comp, is that currently we are starting to decline in terms of its 30-day MVRV. So it means that the less, like I mentioned a minute ago, the less or the lower we get in terms of MVRV, the less sell incentive there is going to be. Like, just think about it from your own perspective, right? If you are like breaking even on your initial investment, or if you're kind of like plus 3% or something like that, or minus 3%, are you as incentivized to start taking profits, quote unquote, or start selling and exiting your positions as you are when you are plus 20%? Of course not, right? Plus 24%. So the lower we get, the more undervalued the coin is according to MVRV. Currently, we are not undervalued still. Like, undervalued would be somewhere around here, where we actually break below 0%, so below break even, and we go into extremely sort of undervalued territory, like here, before we started breaking out. But at least, like, you can see that the last time comp broke out, we were at about plus 22%, and then we went down to as low as 2% before we were able to sustain another upward move. So good thing to keep in mind is that the relative unclaimed profits of short-term traders are now starting to decline. Sucks for them, good for comp, right? And these are some of the metrics that I would keep in mind. So for now, there is a few sort of concerning signs for me in terms of comp, just based on what I just did, which is a very rudimentary analysis. So what I saw are a rising social volume, rising exchange, rising amount of comp being moved to exchanges. MVRV is still kind of not great for me. So on the other hand, however, the general activity on the market, on the network, daily active addresses continuing to grow. That's good. Like if you look at all of the top coins, one of the things that really ties them all together is that there's a network effect and there's a growing amount of participants in these protocols. So the fact that Comp has had like I think about 2x amount of people or addresses using its platform or protocol in the last 2 months, that's great. Just keep going, right? So on a long-term stick, I think that's a very good sign. All right. Finally, I actually had it prepared. Where are you? There we are. So this is the holder distribution, right? What this metric shows, guys, is the amount of Bitcoin in this particular case being held by a particular group of addresses. So for example, here, if I highlight this group, it shows me the amount of Bitcoin being held by all addresses that have between 0.1 and 1 Bitcoin. So kind of a, retail crowd or retail investors, right? So there's a couple of things that I want to mention about this particular chart. A few weeks ago, I think it was maybe 3 weeks ago, I wrote an article in which I pointed to the fact that a lot of retail investors, so anyone like 0.001, 0.01, these sort of low level investors in Bitcoin seem to have been pretty scared of the rally ever since we broke 13K here. Right? This is the point at which they stopped accumulating and they're like, okay, I think this is, we went too far for my own taste. And in fact, the only real group of holders that has continued to accumulate throughout this rally has been the mega whales. So people or addresses holding between 1,000 and 10,000 BTC, right? These are the only sort of group of addresses. You can kind of look at all of these to see for yourself. But these are the only investors that seem to have been completely unshaken by short-term sort of tremors in the market that have continued to accumulate. And in the past, like between here and here, I think I wrote that they accumulated about $1 billion worth of BTC more, right? Now, several addendums to that post that I wrote maybe 3 weeks ago. Number one is that the retail crowd now seems to be moving back into the market a little bit. So you'll see sort of, for example, all of these different groups of, let me turn off the big boys, all of these short or like small scale investors from 0.001 all up to 1 and maybe 10. Maybe we should even exclude these ones. But they all kind of started exiting the market here. In the past week in particular, they've started moving back into the coin, so into Bitcoin. So I think in the past, from here to here, and I mean from the start, this rally seems to have been mostly prompted and spearheaded by institutional interest and by large scale investors. Now it seems, since we broke all-time high, very sort of unsurprising move, we now see retail guys sort of start flocking back to the coin, which, great, but at the same time, I think it's a similar picture to what we've seen in 2018 as well. So, when quote unquote dumb money starts moving in droves, it's a sort of a cautious place to be, right? Because at these points, you can then expect some of the whales to start offloading their bags onto these newcomers to the market. And this is what we have seen, at least in the last 2 days, right? For the first time in a while, we've seen the 1,000 to 10,000 BTC holders start to at least somewhat decline, or sort of their combined balances are starting to decline, pointing to the fact that they are offloading at least a tiny bit of their complete or collective holdings, right? So once again, another reason why I'm not too surprised that we are seeing a forming top is that whales or mega whales that have been kind of propping up this rally throughout, like for example, let me show you the last 6 months. Yeah, this is where they started accumulating, right? Bam. So the general trend remains up. However, at least on the very short scale, we have seen a small blip downwards in their collective balances, suggesting that, yeah, they seem to be aware that retail is coming in, and they seem to be kind of okay with reducing their exposure a little bit. So, all right, I think that's as far as we can get, Brian, because it's already an hour in. I see somebody also mentioning iFi. There was questions about waves. Guys, if you're interested, especially like iFi, I think has a bunch of different interesting metrics. If you're interested in that, in talking about this more, check out the link to our Discord server. The link is going to be in the description of this video, and just join. You don't have to be a Sandbase Pro subscriber. Just join one of our trading channels that are free for all, and ping me there at IBIS, and we can talk about the market a bit more and some of the metrics. So that's going to do it from my side, Brian. If you want to sign us off, I think we're good to go.
You bet. Thanks, Dino. And thank you to everyone who stuck around through the entirety of this call. It's super appreciated. I see we're still over 55 or so, and that's fantastic to see as we continue to grow these This Week in Crypto calls here. So for now, we wish you all a wonderful weekend. Hope you're staying safe. Happy early holidays, and we will talk to you all next week.
And please, if you enjoyed this type of content, do like and subscribe to the channel. It helps out a lot. I mean, we've been kind of steadily growing these weekly calls, but we are also thinking about, expanding our YouTube content into maybe daily videos. So one way that you can kind of let us know that you would enjoy that sort of thing is to click like on this and other videos to let us know that you enjoy the content that we're making and that you would like to see more of it. So yeah, from Brian and Dino, I guess signing off until next week.
Thanks all.